Lam Research earnings are out for their Q3 2025 and the stock is up 2.5% after the market close, and the year-to-date performance is around -8% for now. So in this video we are going to cover the outlooks, we're going to cover the earnings report, everything. Like this you will understand the growth, the margin, the capital allocation. We'll do again a new valuation taking in consideration the new data that we have, and we'll see if it was good earnings or bad. So as you can see, plus 2% on pre-market, while other companies in pre-market like Amazon, Google and so on are negative. It's pretty good. They had pretty good earnings. Okay, here's a declaration from the CEO, Tim Archer. We are highly confident in our ability to outperform semiconductor industry growth in the year to come. So this is something very good. He also said that there is an uncertainty related to tariffs, but everybody has this uncertainty, so it doesn't really matter. This is the outlook that they did last quarter for this quarter. So they expected a revenue around $4.65 billion, a gross margin around 47.9%, 47.9%, operating margin 31.9%, and diluted EPS around $1 per share. So we'll see if they manage to achieve this. Okay, so let's start with the growth. The revenue grew quarter over quarter by 8%, and compared to Q3 2024, 24%. So steady growth for the revenue. Net income grew by 38% compared to Q3 2024 and 11% compared to last quarter, and EPS grew by 41% compared to Q3 2024 and 12% compared to last quarter. So we have a revenue of 4.7 billion, which is higher than the expectation, okay, than the guidance that they give. And it's usual with these companies that they most of the time do higher than the guidance, so it's something very good. You can see that the net income here, the growth of the net income, okay, from 965 million to 1.3 billion, really good. And the net income per share diluted is 1.03 and the guidance 1. So very good as well. You have system revenues that grew by 26% compared to Q3 2024. It's good, okay, plus 26%. Especially that the system revenue, it's the machine sales, okay, all the sale in the machines. So it will increase as well the customer support, which is the way higher margin, and that's why they increase as well their margin. You can see in the margin section that the gross margin went out at 49%, which is up from 47.5%, as you can see here in March 2024. Now it's 49%. And last quarter it was 47.4%. So good gross margin. You can see that they were expecting 47.9, they had 49. Operating margin 33.1%, which is up from 27.9% from the quarter last year. And they expected 31.9, so way better operating margin. So it's a business that grows the revenue, plus manage to grow its margin, its profitability. So this is great for shareholders and this is great as well for the business. It's really good sign for the business. The capital allocation now, they did less buybacks than usual because of $500 million debt repayment. Okay, they explain it in the transcript. Okay, in the conference call they explain this. This was a little lower than normal due to that cash that we allocated for debt retirement. But they confirm we have 8.8 billion remaining on our board authorized share repurchase program. So 8 billion represent around 10% of the current market cap. So you have a serious share repurchase program. So considering the recent decline, it would have been nice if they did more buybacks for the first quarter, like for not first quarter, it's the third quarter for them, but first quarter in 2025. Instead of dividend, maybe instead of paying dividend, could have been nice if they bought back some shares. It would have shown that they really believe it's undervalued. They still did some buyback, but they could have done a bit more. The other reason why they didn't do that much buybacks is because of the capital expenditure, okay? It went from 100 million here to almost 300 million. The reason of this increase, and compared to last quarter, the $100 million increase, It's because they driven this increase was purchase of a land in India to enable our unplanned lab expansion there. Our capital spending otherwise was focused on lab investments in the United States and global growth in manufacturing. So they purchased a land in India, okay, to develop activities there. So I think it can be a fair point. I don't know how it will go with this land that they bought in India, but considering the way India is growing, it may be a good thing, it may be a good idea. So this explains why they didn't do more stock repurchase, more buybacks. And you can see that the Capex to operating cash flow is 22% compared to 7% a year ago. So this is explanation for all of this. Now let's see the guidance. Okay, you can see that the last guidance were beaten in any point. So the new guidance that they made is a revenue should be around $5 billion, up 6%, and they as well give this minus or plus 300 million difference possible. So it has they grow by 6% or grow by 0%. Okay, gross margin they expect to keep it around 49%. Operating margin they expect to keep it around 33%, and EPS should be 120. So yeah, we had a pretty solid quarter from Lam Research, especially when we compare to ASML, for example, that the guidance were not that good. Here, the guidance for Lam Research, the CEO seemed more confident about this and more confident about the future here. They are as well very confident about their memory segment. So yeah, they still have the same problem. 30% revenue come from China. Okay, but it's going well. Let's have a look now at the valuation. So my previous valuation was made. This is a new one. Okay, so we'll have 11% growth. Let's imagine we have 11% growth rate of the net income, 2% buybacks. I think they will do more because historically it's around 4 or 5%. 2% buybacks. We're very conservative here. The price valuation, the PE ratio at 19. The average for the last 10 years was around 19. So we put 19. And the net income, the actual net income. So I took the last 3 quarters plus the estimation for the next quarter. So we have 5 billion. Okay. So this gives us a fair value at $78 if we want to do 13% per year. So we're actually undervalued because the price is $65. At 65, we're undervalued. Like when the market will open, we're at 68. So we're undervalued. The last one, so we are up because the last one, my fair value was 78 because the revenues that I put it was this, 4660. So it's less. Now with the value increased of the company, and this is something we want to see. We want to see companies that increase their intrinsic value. So it's a very solid quarter from Lam Research. They're doing in the right direction. Now I hope they will do more buybacks for the next quarter, the next months to come, especially if the price of the company, the stock, stay down like this. So let me know what you think about this company. It's a company, as you see, you can see on my channel, I have it in my portfolio. So I'm happy to see that it's going according to the plan, and maybe I will increase a bit more my stack on it, my position on it.